Well, before I get into this presentation, just want to thank Kai for organizing this event. It's always a pleasure to be here. He puts on a great event, and I hope all of you have enjoyed the presentations that you've been seeing over the last couple of days, and look forward to seeing you all again next year. So going into, I put this as kind of a new presentation. I've stole a couple slides from Sprott and elsewhere, but I thought that, a lot of these slides are quite relevant and new probably to some of you. Again, forward-looking statements. So we're seeing demand right now of around 1.2 billion ounces of silver, and this is an estimate for 2024. I've heard numbers as high as 1.4 billion ounces of silver consumption expected in 2024. These are pretty substantial, numbers that we've never seen in the history of the silver market before. As it says on the slide, there's over 10,000 uses of silver. And the crazy things like yoga clothing, soles of your runners, paints in hospitals, linens in hospitals, filtration systems. Of course, when going back to the 80s, when silver was primarily used in the photographic industry and the photographic industry went electronic, there was a lot of silver around, because all of a sudden this one industry that was consuming 25% of the world's supply of silver disappeared. And then I noticed that being at a copper company in the early 90s, and when I put the first Majestic together in the early 2000s, I put it together because of the thesis, because I was seeing electronic usages increasing dramatically, and I expected that was going to continue. And that thesis has paid off quite nicely. And the last bullet there, and this is something that is some people don't, we heard the nuclear story on the prior presentation, but 80% of the rods within a nuclear reactor actually is silver. And with the new renaissance in the nuclear industry coming, we're going to see another big driver of silver demand over the next decade, which will be quite interesting to see. And here we've got two industries, the EV and the photograph or the photovoltaic industry, solar panels, consuming almost 300 million ounces of silver. And we're producing 830 million ounces of silver as an industry, and these two industries are consuming about 40% of the market. So they've replaced photography by twofold, basically. So the above ground supplies back in the mid 80s was about 5 billion ounces of silver sitting on the surface of the earth. Today it's estimated, and there's a slide coming up, that there's about 1.2 billion ounces of silver left on the earth surface. So pretty interesting. So this is the total supply, and you see that mine supply has been basically flat, slightly negative. We did have a peak back in 2016 of 880 million ounces. Then in COVID hit, we broke through 800 million, and then we had a recovery. Recycling has basically been flat. There's no money in recycling. Your cell phone has $3 or $4 worth of silver in it, and it's going to cost a recycler some multitude of that to even try to take it out. These technology companies of the world are very good at embedding copper and zinc and silver in these circuit boards, and it's almost impossible to extract these metals out of these computers and televisions and refrigerators and microwave ovens and all the different things that are part of our daily life to get these metals out of these components that we rely on and consume on a regular basis. So. And what is future demand or future supply going to look like? Well, over the last 10 years, it's been flat. What's the next 10 years look like? You see worldwide grades dropping among the silver sector. Our grades at First Majestic have been dropping over the last 20 years since I put the company together. I see it all our peers, the same thing. The production from all the major silver producers on the planet has been flat and or negative. And what's it going to take? Well, Hecla came out with a number just a few months ago that it takes 17.9 years to build a mine from discovery to first production. And that's a shocking number. So if you're ever going to see this number increase, what are you going to have to, first you're going to have prices go up dramatically, because the mining sector is not going to make the investment necessary. The mining sector is still in shock from 2011, 2012, where the mining sector thought that the metal prices were going to continue higher. Silver was 2011, silver was $50 in April. In September of 2011, gold was almost 1900. And the M&A activity in 2011, 2012 was quite paramount, and it hit a peak. And then over the next 3 to 4 years, all those mining companies wrote down those assets almost to zero, and well, to zero in many cases. And the mining sector was highly criticized for buying assets that appeared to be at the top of the market. But the mining executives at the time were being told by the banks that silver was going to go to $70 and gold was going to go to 3,000. Of course, it didn't happen. The metals, silver retreated to 12 from 50, gold retreated to 1,000, and the mining sector was highly criticized, as I said. You're not going to see the mining sector do that again. And this is what is going to happen with supply. So to change this number, you're going to need to have triple-digit silver probably for a decade to make any difference in supply, which is pretty shocking. So in an environment where we're already in a substantial deficit, and you got the nuclear renaissance happening, what's going to happen to prices? Where's the metal going to come from? So these are the deficits that we've been experiencing over the last few years. The 2024 number is an estimate, of course, but nevertheless, these are substantial deficits. We don't know where this metal is coming from. There's lots of guesses where it's coming from. Speculation that maybe it's coming from Russia. India is a big buyer. China is a big buyer. It's illegal for China to export silver. India is planning on building the largest solar farm in the world. They're going to need a lot of silver for that. Maybe that's why they're buying so much right now. Their Q3 silver consumption was the biggest on record. I think they imported something in the order of 75 million ounces of silver in that quarter. Pretty staggering number. So this deficit's not expected to change in any way, in the foreseeable future. I'm a big believer of the ratios. As you've heard me many times, I'm a triple-digit silver guy. I came up with that term, over a decade ago. People have copied my term, and it's nice to see. Maybe eventually I'll be right. We'll see. It's interesting that Bloomberg, you see this as the source is Bloomberg here, but it's interesting that they started in 1988. I don't know why they did that, but you see in 2011 there, when silver hit $50, the ratio hit 36. The average over this period of time, it shows 70, which I think is a little bit high, on the high side. I think if you went back to 1974, which is the beginning of the COMEX paper market, I think this number would be quite a bit different. I'd love to see that slide, and maybe we'll try to figure that out for my next presentation. And going to inventories, as I mentioned earlier, we had 5 billion ounces of silver sitting on the Earth's surface back in the 80s, and this is commercial bars. This is when I mentioned inventories, this is 1,000-ounce commercial bars. This does not include silver jewelry, does not include private investments, it doesn't include your 10-ounce bar in your home, okay? This is commercial silver. So in the LBMA, it says quite clearly 1.2 billion ounces, but most of that, about 1 billion ounces of that, is actually held by ETFs. So it's not even available for the market if it was anyone wanted to sell it, because obviously it's not for sale. And something I love to talk about is the paper market. You've heard me rattle about the paper market, I'm sure, many, many times over the last 20 years. But the market trades, as it says on the slide, 190,000 contracts a day, which is the equivalent of about 1 billion ounces, 950 million ounces of silver paper trade every single day in the market. There's 252 days of trading in a year, and that translates into a ratio of 240 to 1. So for every 1 ounce of physical silver that trades daily, 240 ounces of paper trade daily. It's pretty shocking when you see that ratio. And it's one of the reasons why I'll get into the next. You've seen this slide already. This was in my prior presentation, so I'll just skip that. But this is why I opened up a mint. There's a couple of reasons why I opened up a mint, because out of frustration, quite frankly. We started selling silver to the retail public in 2008, and it got to be quite an interesting looking business, back 2021, 2022, and the mints just wouldn't supply us the metal that I wanted. I kept shipping them dory bars, well, not dory bars, but refined 1,000-ounce bars, and they were sitting on their floor for months and months and months. Like, we would wait 6 months for a mint to send us our refined, our 1 ounce coins and our 5-ounce bars and so on and so forth. And it was quite frustrating. My finance department, my CFO, was frustrated because the amount of inventories that were building that was outside of our control. We actually had one of the mints go bankrupt on us, and we had $8 million worth of silver sitting on their floor, and the banks moved in and claimed it was their silver. Right? And we go like, and Pan American had, I forget how many ounces now, I think about 12 million. Tiffany's had about 40 million ounces, $40 million on the floor, and the bank seized everything. And we all had to go to court, and we've got back about 80% of our money, but we did, have that loss. So, we don't want to have our metal sitting on other people's mints, and that same repeat occur. So I decided to open up our own mint. So we started the process last year, and we turned it on in March. We started producing bars, and then we just turned on our coin machines, and that coin that you can see, it's on the next slide. We're now producing coins as well. So it's a pretty exciting part of our business. And what does it do? Well, and the other reason why I did it is because of this 240 to 1 ratio. If you do the math, we're hoping to get about 10% of our total volume through this mint in 2025. Right now, we're at about 5%. So at 10%, that works out to about, and if I get these numbers wrong, hopefully Manny can correct me, but so that's 240 million ounces of silver equivalent in the paper market that we're taking off the market. So we put 10% of our production through this mint. We're effectively taking 240 million paper ounces off the market, which is pretty, substantial. If we if we can get 100% of our production through this mint, which we're hoping to achieve, it'll take some time to get there, but assuming we do get there, then that would be the equivalent of 2.4 billion ounces of paper silver we can take off the market. Pretty interesting. Think that'll drive the banks crazy? I hope so. Questions?
I'm going to start with one, because on the topic of mints, where's the material coming from right now?
This is our own metal. It comes from San Dimas, so it comes from in the form of dory bars. It goes on armored trucks up to Salt Lake City at the Asahi refinery, and then it gets refined into 1,000-ounce commercial bars, as I think you saw on that previous slide. And then from there, you get those commercial bars there. Those are 1,000-ounce commercial bars. That's what we get shipped. That's our own silver, refined, shipped to the mint. That's actually our vault in our mint. And we have 770,000 ounces of silver sitting there right now. And then we convert it into smaller products.
Okay. But solely San Dimas right now?
Just San Dimas, yeah.
Okay. Just a capacity problem, or just better dory bars, better quality dory? Just curious, why San Dimas?
Yeah, well, Lincoln Tata's got to deal with Pinoles, so all the dory there goes to Pinoles, and Santa Elena, we split that up, and logistically, it's just easier for us to get the dory up from San Dimas.
Makes sense. Do we have some questions for Keith on the silver market? Arlen?
What's the constraint from going 5% to 10%
People? Yeah. Yeah. Yeah, it's small staff. There's 5 people that work in the Mint, and they in Vegas, don't ask me why, but they only work 4 days a week. It's the most frustrating thing in the world. We're trying to change that. We need a second shift. Yeah.
Dean?
Yeah, why is there any tax consequence to moving your silver from Mexico to the U.S.?
No, it's all covered under NAFTA, so it crosses borders tax-free.
And why wouldn't you put it in Mexico?
I wouldn't trust it being in Mexico, for one. Vegas is probably the most secure city on the planet. There's police all over the place. Everyone has guns in their cars, and I don't think anyone have the balls to try to rob the Mint. So, no, logistically, it's a great place as well. Like, it's international airport, great access to talent. Big workforce. It's good tax structure. It just made a lot of sense. We looked at several cities throughout the United States, and the same time zone as Vancouver as well, and Mexico. So, yeah, it just made sense.
Yeah, we've all seen Ocean's 11 and know how that worked out. So, fantastic. Ben, we had a question back there.
I was just going to ask, what do you think is like the biggest unexpected demand driver of silver going forward?
Well, it'd be probably retail, I would think. That's the kind of what makes the big difference, and that's what, the Reddit crowd, for example, they drove silver up pretty dramatically in a very short period of time. You'll see increased industrial demand, but that's a slower process. You see maybe 4 or 5% a year in growth. But if the retail investor, the people in this room and others around the world, decide all of a sudden they want to put silver in their portfolio, there's not really that much around. So it wouldn't take much to drive price. But there's really not a lot of interest, from the retail buyer. We see it at our Mint, but we've heard, just off topic slightly, that this whole run in gold. There's been a lot of gold coming into the mints from retail owners of gold here in Germany because of the economy. So there is a supply coming into the market outside of the miners. I'm not sure if that's happening in the silver sector, but I have seen that in the gold sector.
Do we have any other questions? Raymond?
Do you see tech companies are starting to take position in silver mining companies because they need silver for their own production? Like Samsung or something?
Well, I haven't seen it yet. We've seen Elon Musk, get into nickel and lithium. I've sent him a tweet. He didn't reply. So I don't know. We'll see what happens. Tesla could buy the entire silver sector. You look at the market cap of, the top silver producing mining companies. I don't know what it is, Manny. What's the number? How much? 50? 30 billion. So the entire silver sector is $30 billion. So Tesla could buy that, with pocket change.
I have one question for you, and we talked about that yesterday, Christian. That's why I was looking at you, is demand from the nuclear energy side, and how that is sort of impacting the silver market, because nobody really has that on their radar screen. We all know about photovoltaics and batteries and all of that good stuff, but how about the nuclear energy sector here?
Yeah, it's newly come to the table because of this new interest in nuclear. I've known for a few years that a nuclear power plant has silver in it, but I've never known how much. And I had a discussion with Maria Smirnova from Sprott just a couple of weeks ago on this exact topic, and they're doing some research right now in the nuclear space to try to figure out, because of course there's different sizes of nuclear plants. They don't all come in one size. So on a per megawatt or basis, there will be some numbers coming out over the next few months, I expect.
Excuse me. My point was actually, I know that, Keith knows that, we all know that. But my point was that we can measure with algorithms that silver demand is not price sensitive. That means a normal silver commodity buyer, once the price moves up, he will stop to buy in order not to jeopardize his price. But the nuclear sector, even spending a lot of money on silver, the amount that this silver means for the total investment is so low, that you won't stop buying. That's the truth. Now that means if speculators buy silver, the nuclear sector will continue to buy silver, whereas other consumers would stop. That's the chance to get it over 50. That you get a second buyer buying at the same time. It's all marginal, okay? It has to happen at the same time. That was actually the case.
Do you need to repeat that real quick? Did everybody hear that? Okay.
But that goes the same with all industries. I came up with a phrase a couple of years ago: "Copper's the highway, silver's the glue." So copper circuitry, whether it's in a Tesla or whether it's in a cell phone, does not work without silver. Apple or Tesla don't give a hoot what silver costs. It's not going to affect the price of their automobile or their cell phone.
Exactly. Yeah. But in the nuclear, you get a new one who doesn't care about the price, and that's important because the photoelectric does care about it.
Okay, we had a couple more hands go up.
On that topic, and there's a slide which I would hoped would have been in our presentation, which we should have slipped in there. But again, from Maria Smirnova from Sprott, she had a slide about the past decade of percentage of silver in a solar panel. And there was a time where DuPont was thrifting, and they were trying to reduce the amount of silver to the least amount as possible, because silver was the highest cost component within a solar panel. There was actually even a group of companies that were trying to replace it with aluminum and tin to see but the efficiencies were so low that it didn't work. So now the solar panels that are currently in the market actually consume 200% or twice the amount of silver today than it did 5 years ago. So the solar industry has realized that the efficiency went so low that customers were complaining, and they had to improve the quality of the products by adding more silver.
Fantastic. Tim, in the back.
Have you done any calculations on what the impact of the growth of the copper demand story will have on silver? The million tons of extra copper being required every year for the next 25 years. I mean, that's got to bring a lot of extra silver as a byproduct of that.
Yeah, for sure. I used to run a copper company. I don't run a copper company anymore. So you need to talk to Robert Friedland. I think he'd be the best guy to answer that question. But the silver's, as I said, silver's the glue, copper's the highway. They work together. If we're going to electrify the planet, bring electricity to parts of the planet that currently don't have electricity, and do all the green things that we want to do as a human race, and we're going to need a lot of copper and a lot of silver.
If you run at 100% to your mint, how much is your margin increasing?
Currently, it depends on the product. We have some special products. We have a Trump bar, for example, which is $5 over spot. We have a 1776 bar, which is also $5 over spot. Most of the generic products that we produce are $3 over spot.
Okay, I have one last question for you, Keith, and it sort of came out of the panel we had yesterday as well, is holding back production. We talked about that earlier, and you've done that before, you've done it in the past. Is that feasible for a mining company? And tell us a bit more about that possibility there.
Yeah, sure. Well, as I said in my presentation, we've got over 700,000 ounces of silver sitting at the mint. There's about $25 million worth of silver sitting there on the floor, which is part of our balance sheet. And that, we keep adding, San Dimas keeps shipping, and we keep producing. And that number may fluctuate. End of Q2, I think it was 730,000 ounces. So Q3 was 770,000 ounces. And that's, obviously we're selling ounces every month as well. But not all mining companies can do that. And I know mining companies come under criticism for not holding back metal. But if you're a concentrate producer, which many mining companies are, you're producing this pile of black powder that contains all kinds of different metals, and you're shipping it over to some refinery or smelter, pardon me, in Korea or China or Japan or wherever it's going. And that refinery or smelter is not going to ship you back the metal. They're going to keep it in their own account, and you're selling it to them. So there's no hope that mining company, then they wouldn't pay the shipment cost anyways, even if the smelter agreed to ship back the silver or the gold to North America, the cost would be prohibitive, so it wouldn't happen. So that doesn't happen for most of the mining sector. For us as a doré producer, it's quite simple because we're producing a block of silver, which is basically 95 to 97% silver with a little bit of gold in it and some other metals. And that gets shipped to refineries in North America. So it doesn't leave the continent. And these refineries spit out 1,000-ounce commercial bars, and we put it in our warehouse. And that's it. So it's super simple. So for doré producers, you can do it.
We have time for one last question. Otherwise, I have one last one for you. Oh, John Mark.
What Keith just said is really important. It's kind of clarified was that if we have deglobalization and if we actually stop allowing Asia to send back metal, what this means is that so much of a paper, and this is my question to you, Keith, is the paper becomes under trouble because all of the real metal has been going in concentrate to Asia. And we're doing paper in the Western world where we're not really getting metal. How do you see, Keith, if we do deglobalization, what happens to silver? And there's two silvers. There's an Asian real metal, and there's a real problem because we don't have metal, we just have paper. How is that going to play out, Keith? I think that was, please.
Well, it'll be interesting to watch that. And I can't answer that question because I don't have a crystal ball. But, the Western world tries to move manufacturing from, the East to the West, it's going to be disruptive to the supply chains for sure. And, the North American manufacturing base will need to see more metal. And we're seeing the odd politician recognize that. And there is discussions between some of the, more, I guess, astute politicians, with the mining sector on exactly that topic. It's early days, though. So it's really hard to really estimate, what would happen or what will happen.
Fantastic. I have one very last and very cheesy question, Keith. It's a real cheesy one. I almost feel bad about even thinking about asking it, but where's the silver price going, Keith? Give us a price target.
Well, I'm actually close to I said $30 by the end of 2024, so I guess I'm right. I haven't been right for about 10 years though, so. But yeah, we'll see. Look, I'm a triple-digit silver guy, and hopefully I see it in my lifetime. I expect I will, but we're at one point I didn't mention, we're mining 1 to 7 to 1. So for every 1 ounce of silver or 1 ounce of gold we're mining worldwide, we're only mining 7 ounces of silver. We're trading at 87 to 1 today. Doesn't make sense. It should be 7 to 1.
Perfect. Awesome, Keith. As always, what a great pleasure.
Great.
Thank you.